What's up YouTube, it's Louis here bringing you today's cryptocurrency video. We're going to take a look at Hbar again. Now since yesterday's video we had that ascending triangle and it failed to break to the upside. I think it did, but when you came back to find support on the neckline of it, you lost it, and then you lost the support of the actual trend line. So before we get into this in further detail, please like, that would be very much appreciated. And this is how we grow the community, guys. This is how YouTube gives more impressions on my videos, if we can get more likes and more comments basically. So obviously comment any questions that you have on Hbar, or disagreements or agreements or whatever you have. I don't care about the haters, but and of course turn the notification bells on, and if you could please subscribe to my channel, because a lot of you are not subscribed. Perfect. So Hbar's formed this bearish cross on a daily. Oh, everybody panic, we're going to zero. Don't worry guys, because a lot of the time all this bearish cross is meaning is that we need to come down and test this 200 EMA, which yesterday we slightly missed it, so now we're getting that retest. What I do want to see is this area hold. So you have a swing high over here, but it is only with the wicks. So I'm going to look backwards into the past now. So I'm going to look at this support over here in the past. I'm going to drag this back. Look to the left, structure leaves clues. So this is a very key level of support and resistance. An area's more like the best confirmation that this box that you're drawing is a key level of support or resistance is touches on either side. So you have resistance here, support, 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 resistance, support, back to resistance, 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 support, 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 and now have we come back to it again? Not just yet. So it's highly likely that we could come into this box, maybe have like a little fake out to the downside. It's all on Bitcoin, so when we zoom in a little bit, I'll give you some further downside targets if we do lose some lows, which we did yesterday. So I'll give you some targets, but at the moment all these levels have been respecting that I've given you in the past. It's just we would have had bounces off them if it weren't for Bitcoin continuing to go down, okay? Because it's all about swing highs and swing lows, and it's best to always zoom out. So obviously we knew about this ascending triangle, sorry, and we had a breakout target here to the upside over here, which was just I think that's a new all-time high, sitting at about 60 cents. But of course you got above it and faked out, and when this happens it means that you're going to come and test support, and it's whether this support is going to hold up. And as you can see, we fell below it, back tested it as resistance, and then lost the low here, confirming this short-term downtrend. Now what is the target, guys? Something that I did miss out, I can't lie to you guys, was this rising wedge, and this rising wedge target is down at the bottom of the wedge. And some people might say you've met it, but I think that we could come down a little lower. Of course, if we weren't to meet it, we would need to see a bottoming out structure here, like an ascending triangle, like a inverse head and shoulders, like a double bottom, or any bullish candlestick patterns that are going to start off that bull trend. Look at this. This over here is something we called a spinning top, and after that spinning top, look what we had. Boom. You met this key level of support, which we haven't done yet. Yes, beautiful that we met the 200 EMA, but I would expect maybe a wick down to hit at least. And then look at that candle for you. Beautiful rise after that. Let's look at the percentage gains after that spinning top. So look, 41%. So if we get some sort of candle like that down here, because now we're at this swing low over here, which is your previous swing highs, this could be a nice area for entry. But I wouldn't enter right now if you're not in Hbar. Wait for the bottoming out structure, wait for that resistance of that bottoming out structure to break, and then back test that as support for further confirmation. Because now you've met this technical target potentially of this rising wedge, we need to see that bottoming out structure to reverse the trend. Just like here, you came down from this double bottom, came up, yes you came down again, but you printed that spinning top on this support over here, swing high, swing low, but you did come down with the wicks down here just to basically touch it with the wicks before continuing up and having like a 40% pump after that. So we need something like that, and that could take days, you know what I mean? That could take some weeks, because this is on the daily time frame, so it will take a while. It's not going to be instant. We're currently on the 28th of November, and to be honest guys, let's be real, we're probably not even going to start going up next week. It's probably going to be the week after, like the end of next week, to be honest, because I don't just see some V-shaped recovery. I think that's a bit of hopium. Obviously I'd love that, but I think it's a bit better to get like a bottoming out structure like that, or come down, shoulder, wick down to here, get back above, confirm its support, inverse head and shoulders, anything like that. That's what we need to look out for. So Yeah, this is the level that I must see held. Let's look at some downward targets on the daily time frame. So I'm measuring from 21st September to 12th of November. If you do lose 28 cent, I'm bearish, guys. I can't lie to you. So this is the level that we must see hold. If we lose, let me move this for a second. If you lose 28 cent, we could come as low as 20 cent. Of course, I don't want it to go there. I don't want to be a bear. I don't want to be a moon boy. But I'm just telling you what I'm seeing in the charts. And when you lose key levels of support, these are your targets down here. So hopefully they don't come. But of course, if you lose that low over here, you're basically confirming that. You can even say this is a large M-top, potential M-top, because it's not in play yet. So if so, you need to lose that neckline over here. And if you do lose this low, that's when that comes into play. And we can check the target for that nasty target. Yeah, that won't happen, guys. It won't happen because that's going to send you down to here. That will not happen, okay? This is why you must use the log chart, basically, because the log chart will show you, you can see patterns on the screen, but the log chart will give you confidence into the fact that that won't happen. I can go to Bitcoin, for example, to show you exactly what I mean. So at the beginning of the year, or back in May, we had this, everyone was shouting that this was a massive head and shoulders, but I never once thought it was a head and shoulders, and I made a video on it, but I only had somewhat like 30 subscribers back then, so no one listened, of course. So shoulder, head, shoulder, everyone was saying, but I never saw that once. When you make can you see the swing high here, swing low? You make a new swing high, you come back to the previous one, confirm that support before continuing. If you lose that, then if you lose this, then you come down to the next swing low, which we have. And then what pattern does that create? A massive double bottom. So once we break this neckline, once we break this neckline here at 60k, then we will head, let's check your technical target. No, wrong. Down here, 28k. Back up to the resistance. Once you break the neckline, I think it's like 90 something K. And yeah, you're going to have a target at 94, 95k for Bitcoin. Once you break above 60k and confirm that support, that W bottom comes into play. But the people that are saying head and shoulders, this is why I knew it wasn't head and shoulders. If you lost that neckline over there, look what your technical target would have been. It's ridiculous. And this is how I knew straight away it was not head and shoulders. Do you ever think in the history of Bitcoin it will get back down to $700? No chance in hell. So that's how I knew straight away, because I'm using the log scale. If I turn off the log scale, and I did that again, this is why a lot of people were shouting for it, because they're not using the log scale. Look, when in hell is Bitcoin going to go to 1.4k? Never. If it does, I'll be buying all the Bitcoin. You know what I mean? That would never. No one would ever let that happen. So you must use the log scale, so you can see the historical data for what it is. See the true trend. Do you see what I mean? Take off the log scale. Can you see the trend down here? No. So look at that. It looks so parabolic, but it wasn't. Okay. Turn on the log scale. You can see everything for what it truly is. I hope you understood that. Let's go back to Hbar, see if there's anything else. So this is why that won't be an M pattern, basically. Trying to make you guys understand that. So let's go to the 4 hour, zoom in a little bit, see what I was talking about yesterday. So once we lost this low over here, I did give you some targets to the downside, which is the 1618, and we met that. But now we're under it. You've created a lower low. So hopefully, let's see if we have bullish divergence. Oh, beautiful. Can you see here we have a low and a lower low, and right here we have something called hidden bullish divergence. On the RSI, you're printing a low and a higher low. So this is something we call bullish divergence, where on the chart it looks mega bearish, but potentially we could be creating this large double bottom right now with a lower low. And this is what a lot of the altcoins do, like VeChain, XRP. There's loads, but most of them, when they double bottom, the altcoins I'm talking about, they do like to print a lower low and then eventually double bottom out. So this is your new neckline. And so I'll give you a technical target out of that. I really love this. Can you see how this here is slanting upwards and this here is slanting downwards? So that's the hidden bullish divergence. Oops. Yeah, that's why I like. So we must get above the 1618, okay? This right here, if this is the bottom, this is a very nice candle. And if this can close, that we've got 40 seconds left of this red candle over here. So that over there is a bullish hammer and a bullish spinning top if it closes as is. These candles don't need to be green, they can be red. But as long as you're not loose, look, I think you are at support, because if we measure from here to here, can you see that? You haven't lost, let's get that exact. So for Hbar, yeah, you come down, made a lower low of the bodies, but that body's not closed lower than that wick. Yeah, we have the wicks down here, but the bodies are not closing lower than that wick. So you're not losing this support at the moment. It looks ugly, of course, but you're not losing that support at the moment. So if you can close like that in 1 second, boom, 1 second. So what I can expect, maybe another wick to the downside if it wants. And actually, if you get 3 in a row, it's even more bullish. The more times you see it, the more bullish it is, basically. So yesterday, if we go to the 1 hour, I was talking about this ascending triangle because we're on the smaller time frames. Can you see that? You're bouncing between resistance, support, resistance, support, resistance, support, resistance, support before a breakout happened. And so your technical target out of that breakout would be something like, look at that, taking you to 34 cent again, 34, 35 cent. But you didn't meet that technical target. You got rejected by the 55 EMA and printed something over here called a doji at resistance, and as well as a shooting star, multiple shooting stars and dojis at resistance. So this is negative. This is like more confidence to the fact that you're going to roll over because you didn't form the bullish cross. You didn't even break above the 55. After hitting the 55, you want to see the 20 hold. But can you see this trend line we were using as a ascending triangle? If we can keep moving that forward, dragging that into the future, you can see that you lost that, and so you confirm this downward trend basically. And you have technical targets out of that as well. So let's get you your technical targets. So you lost this low at the 1, and when you lose that and you confirm that as a resistance, you head to the 1618 at 29 cent, which I've already given you earlier in this video. However, you've gone back above the 1. So if we can see $31, 31 cent, confirm that support, then you won't see any further downside. If you do come back below the 1, hit your head on it, use it as resistance, then you will fall to the 1618. And after that, I'd like us to get back above the 1. But if you lose the 1618 and hit your head, you're going to come down to these lower targets, which of course no one wants to see, but that's what the chart's saying. Do you know what I mean? You need to understand that. It doesn't matter what we want, what I want. It's what the chart wants. And the clues are in the fibs, and the fibs do not lie. So we must get above 31 cent right now. Some early confidence is the fact that we've now printed these 2 bullish candlesticks, which is your bullish hammer and your bullish spinning top. So it's nice at the moment, but we are still below the 1618. We haven't tested it as resistance yet. You come close to it, but you haven't tested it as resistance. So if you do, that's when it gets negative, and we'll come down to these lower targets that I've already given you, 29 cent. I hope you understood today's Hbar update. It might be confusing. Just watch it over again. Make sure to like this video, comment your opinions on Hbar. If you agree with me, if you disagree with me, and whatever. Please subscribe, guys. I'm trying to get this to 1,000 subscribers. Once we hit 1,000 subscribers, I'm going to be doing a giveaway. And I'm going to basically teach someone completely how to be a self-sufficient trader on crypto and potentially Forex. I have a course that's got over 6 hours worth of content and over 35 plus videos going through mindset, psychology, going from zero knowledge to basically a self-sufficient trader where you won't need anyone's help. You also get 2 months through my Discord group chat as well. So, and also a 1 hour mentorship lesson where I'll take my time out of my day to work with you to get any of your questions answered once you have finished this course. So I hope that one of you of course wins if you enter the giveaway, and whoever does win it will change their life from this course. So I hope you enjoyed today's Hbar update. I'll catch you in the next one, guys. And as always, peace.